Connected ecosystem has made it easier to collaborate. I'm turning this business of one into a family business. And then I walk in, I'm like, check out this new shrink ray I have.
I got a good idea.
My oldest son, he'll often say to me, when I grow up, I want to work at the warehouse and I want to make videos. Oh!
You formed a partnership with Penny Pritzker at some point to do parking, is that right?
Yeah, so when I was working at JLL, that we went through this real estate recession in the early 90s, and the senior people at the firm said, let's do a retrospective on all these different asset classes to see what happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Wednesday, the Fed decides.
They are scared stiff of getting this wrong.
The markets are just primed for the big green light.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
We want to see more good data.
We're still seeing sticky inflation.
How dependable is the data?
How long does it need to be good? 6, 7, 8 months?
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern. Context changes everything.
All right, taking a look at some different risk assets as we await what is going to be the biggest week for central bank decisions over the course of 2023 so far. Looking very steady here, and it probably just points to that level of uncertainty. Yes, as Garfield was saying, a lot of traders at least think we know where we're going this week, but you do want to just sort of just wait and see for that level of certainty. But the Fed, the BOJ, of course, amongst the big headliners, RBA in this part of the world as well. But the focus really is pretty interesting as well. Let's get more perspective with Albert Park, he's chief economist at the ADB, joining us this morning. And Albert, I think looking big picture here, if you take us back, say a few months, a year ago, really post the spike in inflation, central banks were so synchronized. Everyone was really moving to try and tame those price pressures. Now it seems like we're getting a lot less in sync, really.
Right. Well, I think every central bank is looking very carefully at its own situation and trying to balance issues related to macro stability, but also supporting growth. We're still kind of recovering from the pandemic, in Asia, and the recovery has been fairly robust, and we think it's going to continue to be robust. Central banks in Asia have generally been holding tight this year. Early this year. I think they're waiting to see the Fed move first before easing further.
Yeah, and I think you just point to probably what's the most consequential of decisions really is what the Fed does this week. That inflation data that we had out recently coming in a little bit hotter than expected, CPI and PPI, do you think that shifts any of the sort of messaging that we get this week from Jay Powell?
Well, we're not sure. I mean, we still expect inflation broadly to continue moderating this year and for the Fed to, at some point, start to ease. The interest rate decisions of the Fed obviously are really important for Asia. We've done some modeling work where we expect that if inflation were 0.5% higher than expected this year and both the U.S. and the European Central Bank did not lower interest rates this year, that this would probably increase inflation in Asia by about 0.15 percentage points. It also actually would support growth modestly because it would lead to depreciations that would help export recovery from the region.
Albert, what do you see as the risk of geopolitical
uncertainty this year in terms of potentially seeing upside spikes in inflation?
Well, there's a lot of conflicts still globally, and there's the geopolitical tension with U.S. and China, and they're all risk factors. We know that the disruption in the Red Sea affected shipping costs. That's affected Asia-European trade in particular, and we've estimated that could have increased inflation by 0.2 percentage points in the region. And if it continues into the year, it could those effects could increase and max out at something like 0.4% on inflation, which is meaningful. I think in an election year in the U.S., and given the positive steps taken at last year's meeting between President Xi and President Biden, that we expect the U.S.-China tensions to ease this year. I think the relationship is a little bit more constructive, and I don't think the Biden administration wants to pick another fight and have that escalate in a way. So I think very hopeful that things will get a little bit back on track.
But do you think there is that risk growing perhaps of a stagflationary environment? That's something that's been highlighted by Bank of America, for instance.
In China or
in the U.S. and in other major economies?
Right. Well, there's been a lot of talk about stagflation in China because there was very low inflation, some negative inflationary months. But we think that was largely due to food price and energy price reductions, and we still think core inflation has remained positive, and we think inflation in China will be above 1% this year and going forward. I think stagflation fears maybe are a bit overdone. I think everyone is just trying to manage this turn, really, of allowing the inflation to bottom out and for monetary policy to become more accommodative.
Is the China decoupling threat overdone, do you think, when you take a look at how trade is faring at the moment?
Well, it's a bit hard to say. I think we've seen a decline in FDI into China. The balance of payments data show a very sharp decline. The actually utilized FDI capital in China reduction is much more modest at about 8% from a really historic peak in 2022. We see a decline in FDI in strategic sectors into China, which is consistent with the tech restrictions and concerns about future restrictions in the future. But some of that strategic sector investment is moving to other parts of Asia, especially Southeast Asia. And still, there's many sectors in China, like some of the high-tech manufacturing and some of the market-seeking FDI that continues to be fairly resilient into China as well.
Are you convinced that policymakers in Beijing can, well, first of all, whether they can hit that around 5% target? Can they do it without significant stimulus? And is this the right strategic path to follow if we're talking about a longer-term structural slowdown?
Right. We think the 5% target growth is maybe a little bit optimistic. At the party work conference, of course, they did announce some stimulus measures which have led us to be a bit more bullish on Chinese growth, but still we see growth moderating relative to last year, and there's a lot of downside risk related to how they deal with the property sector. You know, they're trying to balance a very difficult landing, a soft landing, where on the one hand they need to unwind some of the imbalances in real estate investment and infrastructure investment in certain parts of the country. At the same time, they don't want to see the economy collapse and consumer and investor confidence collapse. And so that's the process they're trying to manage. I think the stimulus measures that they've announced are appropriate. They are trying to, they cut reserve requirements, they cut mortgage rates a bit. They have been easing other restrictions on property investment to try to encourage some recovery in the property sector. At the same time, they are not bailing out big developers. They are trying to be disciplined, I think, in the types of things they continue to support while letting the sector adjust, because in especially second and third tier cities in China, there was just a huge over-construction of housing, and now they have to unwind that housing. China is in a country we know that the population is actually now declining. So some cities are growing, some cities are shrinking, and so to really keep growth on track, both public and private sector investment in the real estate market need to become smarter and find the areas where there's a market, and to be restructuring or renovating older units that are unlikely to find demand.
I mean, there are a lot of parallels that we've sort of monitored between China and Japan's economy as well, and the BOJ is certainly one of the other big focuses over the course of this week. Could be the first time we see a hike since 2007, but do you think that the conditions are strong enough to warrant that for this meeting?
Well, we don't try to predict what the central banks are going to do, but I think Governor Ueda has certainly signaled the desire to get away from negative interest rates, and the large wage hikes in large firms announced on Friday are supportive of that. I think many people in Japan want to see if those wage increases also get taken up by the smaller firms, which still account for 70% of employment. And whether or not they wait or not to get more reassurance, I think we'll see. But that's certainly, I think, the direction. At the same time, the Governor Ueda has signaled that monetary policy will still be accommodative in Japan, because we're expecting growth to moderate this year in the face of subdued export demand, investment. So they again are trying to balance these different policy goals.
A lack of animal spirits have been one of the biggest problems for Japan, right? Do you think with the progress being made on wage negotiations and wage increases that's going to pass through to households, do you think the economy is in a virtuous cycle now?
We hope so, and certainly the direction that the government wants to go. I think Japan itself also, has enjoyed a kind of post-pandemic recovery to some extent, although that's fading. So the higher wage increases should hopefully give consumers a bit more confidence to continue spending and support growth.
All right, Albert, that was Albert Park there, Chief Economist of the ADB. Thanks so much for joining us this morning in studio. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers go to DayB Go. It's also available on mobile in the Bloomberg Anywhere app. You can customize your settings so you only get news on the industries and the assets that you care about. This is Bloomberg.
My parents immigrated here from the Dominican Republic. My dad was a cook. My mother was a housekeeper. They barely had a bank account. The concept of a 401k was not there. Nuveen is an asset manager. When I think about generational investing, I think about stability and lower volatility. We share similar goals with Wells Fargo. Think about the good that we can do in helping the Hispanic and African American communities retire with dignity.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Watching Daybreak Australia, the latest political headlines that we're tracking this hour. Vladimir Putin has secured another 6 years as Russia's president, winning more than 87% of support, with half of the votes counted. The 71-year-old will extend his near quarter century of rule into a fifth term with his troops on the offensive in Ukraine. 3 other candidates from parties loyal to the Kremlin offered no serious competition in a tightly controlled election. India has announced that general elections will be held over 6 weeks from April 19th. The Election Commission says a 7-phase polls will be completed on June 1st, with vote counting on June 4th. Prime Minister Narendra Modi is bidding for a third term in office, boosted by a strong economy, and a weakened opposition alliance has been struggling to put across a cohesive message. Prime Minister Benjamin Netanyahu says Israel's military will begin operations in the southern Gaza city of Rafah within weeks. The US has described an assault on the city, which is sheltering an estimated 1.5 million Palestinian civilians, as a red line. Netanyahu also pushed back on calls for early elections, saying a vote would paralyze the country for 6 months and mean losing the war. Plenty more to come here on Daybreak Australia. This is Bloomberg.
All right, listen up. The AI race is on.
First hurdle, spending months trying to get generic AI to meet your CX needs. Next, AI's inability to drive real business impact because your AI's answers don't align with your brand.
Win the CX AI race with Nice Enlightened, the most accurate, trusted, and complete AI built for CX on one unified cloud platform. It drives growth and protects your brand.
Get ahead of the curve with Nice Enlightened. CX AI now.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
Well, China's economic activity data is likely mixed at the start of the year, with property still a major drag. Data due later is expected to show retail sales rising, but growth in industrial output slowing. Our chief economy editor, Jill Deeses, joins us for a preview. And Jill, it's sort of a hard data set to read because of the seasonal or the holiday distortions. But if you were to think about sort of the key read-through or the key takeaway, what would be the main message do you think we'll get out of this?
Yeah, it looks like right now we're looking at growth that probably, if you're looking on like a month-on-month basis, or at least as comparable as you can with December to this January, February noisy period, probably not a ton of improvement, not a ton of rapid acceleration in growth. I'm sure you're going to see some green shoots in there. So we just mentioned retail sales data, maybe year on year, not as much of an acceleration as compared to December, but still you've got the Lunar New Year holiday period to account for. You did have an uptick in tourism spending over that period, even if per capita spending was a bit lower this year than it was like versus pre-pandemic levels, for example. You might see an uptick there in fixed asset investment data. That's just as a lot of government spending programs to increase spending on infrastructure projects, that kind of thing improves. But yeah, I think overall, really noisy set of data, sort of limited in what knowledge we're going to get out of this. Probably not enough here to confidently tell us that we're going to hit that about 5% growth target for the year. Maybe there's more support that's needed to actually achieve that goal.
Certainly, Jill, if you take a look at the loans numbers, you do want to see more support for the real economy, right? Because clearly monetary policy and lowering borrowing rates is just not helping.
Yes, I think that credit data that we got late last week was not incredibly encouraging there. What I think a lot of economists want to see at this point is, what else is actually going to transmit into the economy to help things out here. We did get, during the National People's Congress earlier this month, a little bit more support in the form of more fiscal spending, more special debt that's going to be issued this year. But in the aggregate, that's not, any kind of bazooka-style stimulus or anything like that, maybe, would help some of those activity goals a little bit more. The big question, I think, is going to be what does consumption look like throughout the rest of the year? We did see CPI tick back into positive territory for February, but there's a lot of worries over whether that can actually be sustained. A lot of that had to do with, again, that spending around the New Year holidays. So what are we actually going to see in March, April, May? These are, I think, the big questions in terms of the sustainability of at least like some of those little upticks that we've seen here and there.
Our China economy editor Jill Desis there ahead of a busy data done from China, and of course a very clear proxy that we always watch when it comes to how the Chinese economy is performing is not just the Aussie dollar but also how iron ore is performing at the moment. We're seeing a bit of downside there when it comes to iron ore pricing. Trading in Singapore down about 0.4% there. It has just been quite a steady decline as we went under $100 a tonne for the first time in 7 months last week. This bet on the years-long property crisis will continue to run through for China through to 2024, and that, of course, correlates to keeping a lid on steel demand and demand for iron ore. We're seeing a bit of a mixed picture when it comes to trading across some of the big miners. Pure play Fortescue, the steepest declines, down 1.6%. A little bit of softness there for BHP, but Rio Tinto and BlueScope more or less staying afloat. But that price rout really deepened into the end of last week. More signs of these demand weakness aspects, with Chinese steel mills also starting to announce production cuts as we see spot steel prices falling as well. It's quite a reversal from really the bullishness that we saw in 2023, with the iron ore really outpacing most other base metals and in fact most other commodities. We saw that gain last year of 20% and a lot of that being given back now. Let's take a look at broader markets, and the miners are dragging on the broader ASX 200 there. We're off by about 0.25%, and this, of course, as we head into RBA decision week, amongst one of the many central banks accounting for about 40% of the global economy that we will be hearing from. The RBA looking like they may hold rates there, wanting to see more data in terms of the inflation fight, but also as, of course, we have weakness in other parts of the economy showing that economic signals such as unemployment are starting to trend higher as well. Let's get more on, of course, the one of the two major central banks that we're looking at this week, the Bank of Japan. Of course, we had media reports saying that policymakers will end their negative rate policy on Tuesday. Our latest MLive poll survey asks whether that could spell the end of the bull market in Japanese stocks. Take a listen.
We've been saying that the Bank of Japan is very likely to be tightening policies.
My view is that it will be a very dovish exit.
Market split between a March and April exit from negative rates.
Japan raises interest rate, the US goes lower, the yen strengthens a little bit.
I don't think that they want to risk any financial instability.
The stock market has performed very well on the weaker yen, amongst others. So that could take a bit of the zest out of that.
Yes, there will be hiccups, and it seems that these couple of months would be a little bit rough for Japanese equities, but at the same time, they can give you opportunities.
The money then leaves Japan. Where does it go? That's the interesting one. That could bring us back maybe to China.
Let's bring our Asia equities reporter, Winnie Su. So, Winnie, depending on the investors that we speak to, there's two camps. One saying that the yen is just one small part of why we've seen the bull run in Japan. Others saying that we are likely to see a pullback as a result of any moves in the currency.
Right now is really a very momentous moment, and everybody is watching what the Bank of Japan is going to do today and tomorrow. And like you mentioned, a lot of market reports and also some of the strategists mentioning that they are hiking expectation for a March change in 2 days. And also the stronger than expected Rengo wage results also pointing to some big change coming up in 2 days. And in terms of the stock market, you can see that just last week, Topics and Nikkei both down 2%. There's basically a short-term pullback and profit-taking in the market, especially when it comes to financials that have risen a lot on the expectation for the BOJ to hike rates. And also exporters are still going to be squeezed by the stronger yen. However, most strategists and investors that we speak to say that in the long term, Japanese stocks are still going to remain very attractive because overall the Bank of Japan is likely to keep the monetary policy and environment quite accommodative. So even when we see the strengthening of the yen, it's not going to be as significant as much to weigh on the Japanese stocks and its profitability. But more importantly, when we think about some of the longer term drivers when it comes to corporate governance reform, that's still going to be something that would push the Japanese stocks further. And also, once this event is over, it's going to be actually positive because a big risk is taking away from the market, and we might actually see more foreign investors who have been in the wait-and-see mode to join the Japanese stock market's rally and to buy into Japanese stocks. But actually, on the flip side, we're actually hearing from our survey that Japanese investors might still keep most of their funds outside of Japanese stocks and put it in foreign equities because of the yield difference still remaining quite big.
And there are, of course, certain sectors that look attractive and others that look unattractive if the BOJ tweaks. So just tell us about the different ones.
Right, so definitely the bank is a very interesting one. We are hearing some of the investors actually trimming banks already, saying that the Bank of Japan tweaks are pretty much priced in by now. But some actually say that there's more to go for these financial stocks, depending on how far you think that the Bank of Japan is going to raise rates this year. Another attractive sector would be the domestic demand-led sectors, including retail, railways, and also some of the more capex-heavy sectors because they are more likely to benefit from inflation, from the higher consumption level, and also higher wages. In terms of the less attractive areas, some do mention that it's a good time to kind of trim back on some of the stocks that have benefited a lot from the weaker yen, especially those multinational ones and also the exporters. So investors, when they come to look at the Japanese equities from a foreign investor's perspective, some actually, some investors, including Amundi and Morgan Stanley, do recommend investors to unhedge their Japanese equities when it comes to investing.
That was Bloomberg's Winnie Zhu there, and we'll have more on the BOJ in a moment, actually, when the former Deputy Governor Masazumi Wakatabe tells us why he thinks the central bank should not hike rates just yet. We'll have more on his outlook ahead. This is Bloomberg.
My parents immigrated here from the Dominican Republic. My dad was a cook. My mother was a housekeeper. They barely had a bank account. The concept of a 401k was not there. Nuveen is an asset manager. When I think about generational investing, I think about stability and lower volatility. We share similar goals with Wells Fargo. Think about the good that we can do in helping the Hispanic and African American communities retire with dignity.
Coming from Vietnam, my dad, he wanted to document his whole life. I was shooting alongside him. That hobby became an obsession, turned passion, turned doing this for the rest of my life. Hold your pose, yeah, I love that. My Samsung camera is so powerful and it just simplified everything for me. The more I built my portfolio, the more confident I became in myself. If I could inspire just one person, that would be awesome.
Lakwa, and this is The Pulse, every weekday only on Bloomberg.
your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
All right, taking a look at how Japanese futures are faring. You've got that Nikkei contract there in Singapore pointing to some gains here at the start of trade. Japanese yen fairly steady here. It's that really big countdown to the BOJ decision and local media at least sort of reporting that decision as a foregone conclusion, that we would see some sort of exit away from negative rate settings. The question is what that means for Japanese equities, but certainly a lot in the market saying that we can see further gains. But let's get more on the BOJ decision. It is the reason why our Chief North Asia correspondent Stephen Engel has travelled to Tokyo, and he's there with our next guest, Steve.
Yeah, that's right. I mean, the big question is Japan ready for a BOJ liftoff? Let's put that to our guest sitting next to me. He was the former deputy BOJ governor under Kuroda as recently as a year ago. He joins us. Very honored to have you, Masazumi Wakatabe. Thank you so much, sir.
Good to be here. Yeah.
So there is obviously what the BOJ will do and what it should do. I know what you think it should do, but let's first of all say, because the foregone conclusion seems to be after Jiji, Kyodo, Nikkei, all saying it's a foregone conclusion. Is it? What are they going to do?
Yeah, it is. I think that's almost certain. Actually, it's very certain. That's 100% certain. And what they are going to do is to raise the policy rate, and they are going to end the negative interest rate policy. And I think that they are probably going to raise that to 0 to 0.1%.
Right.
And also they are going to end the sort of new purchase of the ETF and the J-REIT. Okay.
The stock market doesn't need necessarily the backstop.
Exactly, at this juncture. But I think that's crucial point. I think that the BOJ is going to insist that even with this modification, the accommodative, the monetary easing policy is on. I mean, that's they are going to say that real interest rate has been in the negative territory, even with this so-called rate hike. So that, and also that they make sure that first, they are not going to raise the policy rate, short-term policy rate in a successful way. So
they're not going to telegraph necessarily future hikes.
Exactly. They don't talk about it. I think if they are asked about that, they think, they say that under the current condition, they're not in that situation to raise it.
Governor Ueda essentially wants to not conflict what he's been messaging already, and that he's going to maintain an accommodative policy despite exiting negative interest rate policy.
Exactly. But also that, that the CPI is falling and the GDP is stagnating, and this decision March is kind of, before the outlook report comes out and before the branch managers meeting in the BOJ happens. So in that sense, and also the Shunto, the spring offensive wage negotiations, not the whole data is available yet. So in that sense, it's a kind of rush to do. So in that sense, the Governor Ueda has every reason to say that this is a continuation of the monetary easing, not the ending of the monetary easing.
Well, if you were still on the board as deputy governor, you would vote against this.
I would vote against it, but I will make sure that that is not going to happen. I mean, that's, So if I, vote against the sort of the consensus, that would be not good. So in that sense, I'm going to have to try to convince others not to go ahead this time.
So why the rush? I mean, the 2% inflation target, how sustainable is that? CPI has come off the boil. It's at 2.2%, still above the target, but it's losing its disinflation.
Exactly. So in that sense, I am sort of puzzled by this rush. I mean, inflation expectations are raised, but it's not as high as the 2% inflation target. So in that sense, if they keep talking about achieving the inflation target in a sustainable and stable manner, it's not clear to me that they have enough sort of data to convince themselves that they can go ahead.
Is the risk of a premature tightening does that outweigh the risk of overheating the economy?
Well, that's the case. I think that I would argue that the risk of premature tightening is greater than the risk of the overheating the economy. If you think about the Japanese economy right now, the GDP is stagnating and CPI is falling due to the waning of the cost push factors. So that we don't still see the sort of the virtuous sort of momentum coming from.
But that's what Governor Ueda wants to see.
Exactly.
The sustainable virtuous cycle. So why is he doing it now? Why not wait till April or July?
Exactly. So that's a puzzle to me. So I'm not quite sure that's why. So I cannot speak for him, but
I guess the shunto was better than expected. Much better.
Yeah, exactly. So they must have some sort of the reason to convince themselves that they are going to have the sort of the demand pull inflation coming down the road. But it's not still clear. That's there aren't so many risks for waiting another month or two.
Well, you were on the board as recently as a year ago. How unified do you think the 9 board members are?
I think that there may be some dissents on this decision. The last time, I think that the one board member dissented and he cast against the decision. And I may expect one or two more. So in that sense, the decision may not be unanimous. But I don't know.
So obviously, you need to see a more virtuous, sustainable cycle of inflation. But what or when should then the BOJ hike? We're going to get the April economic outlook, the quarterly report next month. And then when would a good time to exit?
Well, that's a kind of $1 million question because, the BOJ cannot really decide on a calendar basis. So that's they're going to have to see that, for example, the inflation expectations are rising. Okay. But if you think about the JGB's 10-year yield or other sort of yields, 10-year yield is around 70 to 80 basis points. Mm-hmm. That shows that inflation expectations are not really building up.
Yeah.
If that is the case, they must have hit the 100 basis point, which the BOJ called the reference point. So in that sense, I don't see the sort of the rising inflation expectations. So if that is the case, that the BOJ still has to continue this policy.
What do you think Japan needs most, whether it's policy or anything else right now? What's the most urgent need for Japan? Because, they basically, with a revision, avoided a technical recession. So there are strains in this economy.
Yeah, exactly. I think that we need a kind of coordination between monetary policy and fiscal policy and also growth policy. So I think it's up to the government, actually. And also the BOJ must cooperate with the government. But I think the government can sort of address the problem. And the problem right now is Japan is now at a critical juncture of transitioning from the sort of deflationary-minded Japan to a mildly inflationary Japan. And we see a lot of good signs, like the nominal wage growth, Shinto wage settlements. So I think the government and the BOJ must push this movement forward from this deflationary Japan to a more mildly inflationary Japan. So I think the government can do a little bit more of fiscal stimulus, and the BOJ can continue the current monetary policy.
Wakatabe-san, thank you so much for your time. We really appreciate your insights into this critical two-day BOJ meeting, culminating, obviously, what the consensus seems to be an exit of negative interest rate policy tomorrow. Back to you, Annabelle.
Steve, that was a really great and fascinating interview there. That was our Chief North Asia correspondent, Stephen Engel, with the BOJ decision very much in focus. But playing into that, of course, has been the data. And we just actually had some eco data dropping for the month of January, core machine orders. The numbers, month-on-month basis, a little bit weaker than what had been expected. Year-on-year, pretty much in line with estimates here, but a contraction of 10.9%. As I said, on the month, down 1.7%, so quite a bit weaker than the survey. But we'll have more ahead as we await this BOJ decision. That two-day meeting is wrapping on Tuesday, and media in Japan saying we will see that exit away from negative policy settings. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie.